Well, let's begin talking about the markets with our first expert guest. He suggests avoiding companies facing lots of competition. We're joined now by Michael Simpson, portfolio manager at NCM Investments. Michael, thanks for being here.
Good to be here, Paul.
How do investors navigate this type of environment where the headlines seem to change every day, even on the weekends, as we saw this past week?
Yeah, we're starting to realize that the answer is very carefully. The things that we always look for, we still look for, companies with strong balance sheets, companies that can grow their cash flow, pay dividends, reinvest in their business, and also buy back shares if necessary. And also a new screen for us is, what's your impact of tariffs? We have to make an assumption whether it'll be a 10 or 15% tariff, but we assume some tariffs for some companies, but companies that have the ability to serve the domestic market are in our view, getting a little extra closer attention to right now.
The domestic market being the Canadian market.
Yes, but there's also Canadian companies that have U.S. assets that receive a lot of revenue and cash flow, so they're okay. They're not impacted by tariffs.
Tell us more about that tariff screen. That's a new one that you've added in these circumstances.
Sure. So obviously, during President Trump's first administration, there were some tariffs on Canadian steel. So not very much, but what's new is tariffs around the world, global tariffs. So the new screen is, do you have any inputs that are coming from countries where there might be tariffs, that maybe Canada has applied tariffs as well, or not necessarily the fact, but you may be selling into the US and that may not be covered by the USMCA. So if it's not USMCA content, you may be subject to a tariff. So there could be a company, which I mentioned to your producer, like Dentalcorp, which services all clients in Canada. Dental hygiene is very important. So all of their business is in Canada. So that's a great company. Another company founded many years ago out in Calgary, Red Deer to be specific, Badger, used to be called daylighting, Badger Infrastructure. They invented the daylighting process where you do safe excavation and their trucks go to the US. 89% of the revenue comes from the US. So I think those are just two examples. I have others which are relatively, might be 100% immune, but are relatively more attractive than other companies that have much more direct tariff exposure.
So you have identified a list of stocks that you like, and we'll talk about them. There's five altogether. You've mentioned a couple. But what about the macro environment? What about this environment where investors see markets lurching one way, lurching the other way every day, different headlines coming out of Washington and Beijing affecting the markets? I talked earlier with another guest this morning about the bottoming process, and he has some thoughts on things to look for a market bottom. I mean, I don't think investors will be reluctant, I think, to make a purchase if they think the overall market still has a long way to fall. So how should investors think about the macro environment?
Yeah, investors should think you'll never be able to successfully time the market. No one can do that. But it's almost as if the new macro is micro, because as you mentioned, tweets are coming out all the time on the weekends when markets aren't closed, and economists are predicting recessions, then they're revising their probability of a recession. So what they should do is they should think about companies that are strong, companies that can withstand anything. Like, let's not forget, 5 years ago, we were facing once in 100 years global pandemic. Fast forward 5 years, now we have tariffs that are as high as they were 95 years ago during the Smoot-Hawley tariff days. So the economies were much different 95 years ago. The United States was more of an agrarian economy. So trade is much more complex. Trade has evolved since China was allowed entrance into the World Trade Organization. There's American companies such as Walmart and Amazon, Costco that have benefited from trading with China. And also a great company like Boeing in the US, 50% of their electronics comes from China. So that's why I think we had a pause on the weekend from President Trump over some of these electronics. And as Bloomberg highlighted, there's about 100 million of goods from China, smartphones, laptops, that they're on pause, and they're going to be reviewed under national security. So generally speaking, those national security reviews take longer. So that's why the market's a little bit enthusiastic, not fully ebullient, but a little happier today.
But things obviously could change tomorrow with the latest tweet from Donald Trump.
Absolutely.
Okay,
that's why.
Let's circle back to Dentalcorp. That's the first stock you mentioned. Spend a bit more time. The business of this company is acquiring independent dental clinics.
That's right. So this company evolved from private equity. They went public a few years ago. Their motto was everyone in the Canadian market, or many participants in the Canadian market, love a growth story. So they were acquiring dental companies or dental practices with more than one dentist, and they were growing. Unfortunately, their debt leverage was getting high. So what they told investor is, we're going to pare back our growth to pay down our debt. So they've done that. Their debt to EBITDA is now below 4 times. They also implemented a dividend, which is good. So people, regardless of the economy, you have to go see a dentist. Oral hygiene, as I mentioned earlier, is very important. So I think they can continue to grow. Dentalcorp is also one of the companies. I own about 25 of the 35 names in my portfolio have announced or have a share buyback program. So they've also announced that. So Dentalcorp is very stable, good recurring cash flows. And as they grow and get bigger, they can eke out more economies of scale from their business. So that's one of the names I like, and it's in the healthcare sector, but it's a good company.
Another healthcare stock you own is Calian Corporation. It's a provider of services, and I gather it provides staffing and recruitment services to healthcare providers, correct?
Yeah, Calian has a number of businesses. One is providing training for different defense departments, Canada, also other NATO allies. They do the management of healthcare services for Canada's Defense Department. Also, they provide healthcare services in remote communities. They also, out west in Saskatchewan, have a manufacturing operation that provides antennas for satellites. So quite diverse. They also have a division that provides cyber security software. So quite diverse. It started out of Ottawa, still based in Ottawa, mostly government contracts in the beginnings, but now they're about evenly split between the public and private sector. So we like this. This is extremely undervalued. So I'm highlighting Canadian names, not just for pure patriotism, because I think I can make some money in these names.
Mm-hmm. Michael, thank you a great deal for joining us. We're out of time. The other stocks that Michael liked, by the way, we'll have him back sometime to talk about it, Andlauer Healthcare and Jameson Wellness. Michael Simpson.